So I actually tell a lot of people, like, it's good to get a certain credit card. I pay mine off every week.
Yeah.
I don't pay any interest on it at
Yeah.
all. And the great thing about it is you get money back for spending.
Yeah.
So what I like to do is I use my credit card for literally everything.
Yeah.
I get those points, and then I use that money at the end of the year for Christmas gifts. So I never actually pay for Christmas gifts in my mind.
Word.
Because I'm getting that money back for actually paying for it.
Love the points, man. I went to Italy.
Yeah.
I paid for 2 flight tickets from Italy. I paid for a flight to Turks and other things just off of points. A lot of people want to get started in real estate by buying their first house. One of the first ways to do that is you want to get connected with a great lender. In this discussion, I brought in one of the top local lenders, and we're going to detail the benefits of purchasing a home, or even why you may not want to purchase a home. My name is Chris A. Williams. I'm a real estate owner, investor, and entrepreneur, and today I'm putting my real estate agent hat back on, and I'm joined by a top local lender, Joey Clare from OVM Financial. Joey, it's good to have you here, man.
Yeah, appreciate you having me here, man. I'm excited for it.
Yes, sir. Let's give the people some value. Let's get into it.
All right. Yeah, what you got for me?
Joey, so there's a lot of people that are renting right now, and they're comparing the benefits of renting versus owning. So what advice would you give to, let's say, renters who think they can't buy?
I would just go say talk to your local lender and just see if it's even an option for you to buy. And if it makes sense for you, why not pay to live in your own place and have that asset appreciate over time? As we know, with inflation, the dollar depreciates, but assets like houses appreciate. So it makes sense. It's kind of like an inflation like defense. Whenever you do buy, that money's just going to keep appreciating over time, and eventually, if you do want to sell, it's just like another form of retirement, rather than if you're paying somebody and you're renting, that money just goes to nothing.
Yeah.
So it's like what's the point? That whenever they talk about, oh, if you're renting, you're paying 100% interest, is 100% true. Even though the interest rates are a bit up, I personally, I'm always thinking about my future and what I'm going to invest towards my future. So that's why it makes sense to me to buy right now.
Yeah. And what's that example you were telling me the other day? I think, what was it, like 50 years ago? The dollar, $100? 100 years ago, okay.
Yeah, I would say like, just roughly saying like 100 years ago, $100 was worth $100, right? If you still just save that $100, it'd be worth like $4.25 today.
Wow.
Whereas like if you bought a house, the house is, it's an inflation defense. So you don't really end up losing your money. That's why it's important to invest your money and just let it build over time rather than just saving it.
Yeah.
Still saving is good, but all you can do with your money is either save it, spend it, or risk it.
Yeah.
Right. So you got to have a good balance of all three.
Yeah. I always say, man, I wish I was born earlier so I could have bought real estate sooner.
Yeah.
I know somebody who had came to me. They bought their house in 1960 for about $30,000, and that house is worth $1.2 million now.
Yeah, it's crazy.
They didn't really even do any work to it or anything. Just like you said, appreciation. Yeah. And real estate is such a powerful tool, such a powerful asset. A lot of people, when they say, okay, I want to rent because, I'm just paying to be where I'm at, whatever. Okay, cool. Yeah, you can use it just as a primary residence, but you have so many other options too when it comes to that. Like, that's not even too complicated. You can rent it out. Even if you don't rent the whole house out, you can rent rooms out. When you own the property, you have options like a HELOC too, where you can take equity from your home, use it towards whatever. Let's say you want to buy a brand new Ferrari. You can take equity from your house and use that towards buying a Ferrari. Or taking a vacation. I know people go to Disneyland off their money from their HELOC. I'm not saying that's the smartest thing to do. But people do it. Yeah. But that's not an option that you would have with renting, because like you said, it's just 100% interest with no return. There's a lot of people in my family, unfortunately, that rented for so long. People were in their houses 30, 40 years, raised multiple, or not in their houses, they were in their apartments. 30, 40 years, raised multiple generations in that specific home. And when that lease ends, nothing. You know?
That's it.
All they have is just memories in their brain. Versus if they would have just bought a house, they could have had so many options there. They could have passed it down to their kids. They could have sold it for a profit and took those profits and invested in something else. There's so many different ways that they could have done versus if they just renting it, they only had that one option.
Yeah, no, for sure. And it just comes to like the time that you put in the market, like buying, like, and just letting it sit, matters so much more than just trying to time it. You know, if you remember, whenever COVID happened and the interest rates dropped, people would always find a reason why not to buy. Like, oh, you're overpaying for the house. You're doing this, you're doing that. You're not having an inspection and all that. And then the rates went up to 4%. They're like, oh, you missed the boat. You know, you shouldn't buy now. And then now the national averages are in the 7s. And you know, people are like, oh, well, maybe you should have done that. You just nobody ever knows what's going to happen anymore. But it just, like I said, it just goes back to why it matters, just like time in the market rather than trying to time it. Nobody can time it. I don't care what anybody tells you. Nobody knows what's going to happen.
Nobody has a crystal ball to predict the future. And going back to what you said, you know, because that's a hot topic right now, is the interest rates. People are like, oh my God, interest rates are so high. But 7% is on par for historical averages, right?
Yeah. Back in the day, I mean, they, at some point, I can't really tell you which year, but like the interest rates were much higher. Now, granted, things were a little bit less expensive, but people were still buying houses because they needed places to live. And then those people that did buy way back are so grateful that they did, because it goes back to what you said. You know, their house appreciates, and now they're just sitting on a whole bunch of money. And as an investor, I'm paying, 12%. So I think people who are paying 7% are getting a good deal, you know? Well, that's why it's better to buy as a primary, to live in rather than an investment, because, the riskier the loan is, the higher the interest rate.
Exactly. Now, I want to go back to what you had said before also. You kind of briefly touched on it when you were first explaining. People need to connect with a local lender. But I know so many people, like especially military personnel, they want to use their Navy Federal. They want to use Wells Fargo, Chase, whatever. Tell us why it's important to use a local lender.
Yeah, well, I think credit unions are great for a lot of things. But I will say, like, they have such an influx of mortgages that if there's a hiccup, that they just kind of toss it out and just move on to the next easier one, right? And I think they actually do a very good job of advertising their rates. But the thing is, the rates are the same everywhere. Just, what it really matters is taking a look at the fees, right? Like, one thing is Navy Federal has a loan origination fee of like 1%, right? So that can go up. I think it's like capped at 3,000 or 300,000. So 3,000, it makes sense. Whereas other local lenders, they have like a set rate on the loan origination. It's just going to stay there and kind of go from there. But I can't tell you how many deals I've had to save from Navy Federal because they just didn't do the work up front. And I know another important benefit is like, what level of service are you getting? Whenever you go with a bank, you're getting banker hours, but
the typical 9 to 5, Monday through Friday.
But with a local lender, I can guarantee you, if you're working with one, you call them at 9 o'clock on a Saturday and we need to write up a contract, they're going to pick up.
9 p.m. on a Saturday?
Okay. I'll pick it up. I'll pick it up. I mean, we've had a couple conversations at that time of night. But I mean, it comes to like, I guess you can compare it to like if you're going to fly. What's a good airline? Like, I know one bad airline I'm about to bring to mind,
Don't get a suit. Don't get a suit. I know what about to say though.
All right, I won't say it, but
it rhymes with fear.
Yeah. But of course, you're not trying to ride on that airline because the experience is gonna be bad. You've seen the TikToks and the videos of where people have bad experiences. Why not go to the better airline where you're gonna get to that safe location? Right? So that's essentially the local lender. He's gonna get you to that safe location with as little turbulence as possible. You're not going to guarantee you, but everybody's situation is different. Everybody has different obstacles. Nobody's real estate transactions are going to be the same.
I agree 100%. And
so another thing with local lenders is, we work directly with the Virginia Housing Development Authority. So that involves
what is that?
They're responsible for the first-time home buyer loans in Virginia.
VHDA, right?
Yeah, VHDA.
Okay.
So we have grants and down payment assistance where people are getting financed the down payment. And all that good stuff. There's other programs in there like Spark. You know Spark, right? So, but
I do, but the audience may not. So explain Spark.
So with Spark, as long as you are considered a minority and you have a Virginia housing loan, which is a first-time home buyer's loan, they will reduce your interest rate by a whole point.
Oh wow.
Yeah.
So you could go, let's say you have a 7% interest rate with Spark, you can go to 6% interest rate.
That's right. Yeah.
But okay, I know people talk about interest rates, but how does that actually benefit the buyer though? Like, okay, if I have, let's say, a $2,000 monthly payment with a 7% interest rate, that 6% interest rate would take me to like what?
It'll probably save you around like $300.
Wow. So $300 per month. So what
was the purchase price again?
Let's say a $350 purchase price.
$350. Then let's say save you around like $300. Yeah.
Okay. Wow. So let's say I had a $2,000 a month payment. Just by going down 1 point in my interest rate, I would be at like $1,700 a month.
Yeah, somewhere around there. Yeah, I mean, of course, we're just
rough
basing,
estimate.
right?
Yeah. But that's huge though.
Yeah.
Because I know that's like a big concern for people, you know, when it comes to purchasing a house or making that decision when it comes to purchasing or renting, is their monthly payment, because they're paying that for the next 30 years. So one thing I typically did with my home buyer clients to save them money is I would negotiate closing cost assistance.
Right.
But maybe instead of putting all that towards their upfront fees, we would put a portion of that towards paying down the interest rate. I know when I bought my first home, that's what I did. You know, I took money and put that towards paying my interest rate down to the lowest possible point. So, you know, that saved me like, I think at least $300 on my monthly payment. And that's, for me, that's what I cared about more instead of the upfront cost. I just cared about saving money on the monthly. And I know many people are looking to do that also too.
For sure. And I know some of the things of what we do is, like for like our VA people, right? If they are qualified for the first time home buyer grant, they get a 2% grant, right?
Okay.
And I know one thing that we've done is we've used that grant money to buy down the interest rate. Okay. And then we applied Spark, and we had you cover the rest of the closing costs from negotiating it from the seller to pay for our buyer's closing costs. Essentially, what we've been able to do is make it so that we're getting a better than market average rate for their loan, and they're coming to closing with little or no money out of pocket. Right?
Yeah.
So like, I actually just closed a buyer last week, and we closed them with a 5.25%.
Nice.
Because we did just
and the normal rate right now is about 7%.
It's around 7.
And you closed somebody with a 5.25.
5.25.
That's great. How'd you do that?
Well, we used the grant money to buy the rate down, and then we had them apply for Spark and lower it even more. So let's say like the national...
And Spark is a program that if anybody comes to you, you're going to help them.
Of course. Like, yeah, if they qualify, you know. So the cities, they'll have a time where it's available and whenever it's not available.
Yeah.
However, I've seen for Norfolk that it's been available the whole time. You know? Well, whenever it's there, you got to take advantage. You got to go get those funds and just roll with it, man. Because that's, you're saving a good bit of money just being able to get into that program. Yeah.
Okay, so that's something you can help the buyers with. So that's really good. Yeah, I mean, all these things, they're super beneficial. I'll say, you know, like we've talked about more. I posted, you know, on my social media and such, like, hey, you know, this person's been able to purchase a property for $0, or they even got paid at closing. A lot of that is just because, you know, being able to negotiate the closing costs and things to that effect. So, you know, that's something that we work in tandem with. You know, we've got many examples, many stories of clients who have been able to do that. So I think for people who are looking to purchase a home, it's really all about getting with the right duo when it comes to your lender and the real estate agent. You got to have somebody who's working constantly on your behalf for you, that's constantly trying to get you the best deal, instead of just having you, you know, just another number, just another transaction. So I know that's what I do for my clients. I know that's what you do for your clients also. And that's how we've been able to be so successful when it comes to that.
100%. You know, I think it is really important to find somebody that genuinely cares about what, you know, their buyers' pockets look like.
Yeah.
I know I worked with an agent that she didn't really seem to fight for the closing costs like she should have.
Yeah.
And I actually had to advise the buyer, like, hey, you should actually just, you guys are negotiating, ask for just a little bit more.
There wasn't an agent on my team, right?
Not at all. No. I don't have to do that with you people on your team.
Good. Just make sure.
Yeah, because the way the buyer presented it to me, it seemed like if she didn't accept what they put, they wouldn't accept the offer at all. And I was like, look, you just ask for a little bit more. Worst case scenario, you're going to be in the same position that you're in right now.
Yeah.
She ended up getting the extra money. But it really was like eye-opening, like, oh my God, there's really agents that are just trying to get you under contract and just get the deal done, and like just trying to make the negotiations as easy as possible. Of course, you want to be, you know,
be realistic.
You want to be good on both sides, you know, but they left it open for her to ask for a little bit more.
Yeah.
And that little push allowed her to get that, man. And, you know, she was super happy. I hear that she just, every time she sees the person that referred me to her, she's just smiling ear to ear because she got that great rate, and she got the extra closing cost assistance. You know, leaves me with a good review. Everybody's happy. You know?
I think that's a great thing to touch on also too. A lot of people can get, you know, confused when it comes to closing costs, and they're like, okay, what properties can I get closing costs and what can't I always say there's really no set line, like, hey, if you buy in this one city, you're always going to get closing costs. You buy in this one city, you're always not going to. it really depends from property to property. But I always say it boils down to basic supply and demand. So I used to work at Foot Locker, right? So I like to bring things to shoes example.
Yeah.
So every Black Friday, we had a new Jordan that released.
Yeah.
And that had all the hype for it. You know, all the sneaker blogs was posting everything like that. We would put it out front in a glass case. The moment Saturday 10 a.m. when we opened, we got a line around the door of people that are trying to buy these Jordans.
And you're not going to get a deal on them.
There's no deals. There's no discounts. Employees, we can barely even get some, right? Because the demand was so high and the supply was so low.
Yeah.
Versus if we got some Pumas, you know, for example, we got some Pumas that been sitting on the shelves for 6 months. Guess what's going to happen? We're going to put that red sale tag on them. And then we're going to keep on dropping. We'll probably drop it 10% per week or so until we can get rid of that supply, because we had such a supply for it.
Yeah.
But our demand was so low. So it's the same thing when it comes to closing costs and, you know, negotiating that for houses. You got to see what the supply and demand is, and then we can negotiate from there. I always tell my clients, if there's a chance that I can get closing costs covered, there's even a slight chance. Trust me, I'm going for the kill. But I'm going to be realistic and let you know, some houses, we're not going to be able to get closing costs because the supply is so low. The demand, they already got 10 offers. We can't ask for closing costs.
I remember one time you called me and asked, you like, hey, how much is the closing costs for this property?
Yeah.
Or for this buyer? And I was like, oh, it's just 3%. And you were like, all right, I'm going to ask for 4. I'm like, okay, let's go for it. You know?
I do it all the time, and I get it actually a lot of times too.
Yeah. Because
I just recognize the situation. And one thing is, I'm going to fight for my clients, you know, as hard as possible. And my agents are taught the same way. Fight for your clients. Hey, if I know that we can get 3%, and I've got the deal locked in, why not ask for 4 like you said? You know, it's the worst they can do. I already know I got 3% in my back pocket. I already know my client needs 3%. Okay, I give them 4%. You know, it's a win-win for everybody at that point. Even for the seller, because their house still sells.
Yeah, no, for sure. You know, it's even better, like if there's any extra money left over for any of our veterans. Yeah. Well, that can go towards buying down the rate, or if there's any money left over at the closing table, like an extra $1,000. Yeah. We can use it to buy down some of their debt.
Oh, that's a good point. That's okay. Talk more about that.
So they have a car loan that's say like for $20,000, and we have an extra like $3,000 at closing. We don't know what to do with it. We didn't use it towards buying down the rate or anything. You know, we get their statement and we apply that $3,000 towards that car loan or credit cards or whatever, because we don't know.
Credit card debt too?
Yeah, any type of debt, any debt. So that's only for our veterans though. Yeah. So if it's regular FHA or conventional, we don't have that luxury. But you know, there's just so many benefits to that VA loan that our veterans don't know about.
Yeah. Okay, so let's talk a bit more about that VA loan also too, because a common thing that I get, because you know we're in Virginia, people think the VA loan is just means Virginia loan.
Yeah, it's understandably so. Yeah,
the VA loan isn't that. The VA loan is for military personnel. Talk about some of the benefits of the VA loan. You know, who can qualify. Like, okay, let's just say I got shipped off to boot camp, you know, and I graduated 6 months ago. Can I get a VA loan, or you know, who's at work for and so on?
Yeah, roughly you need to be in the service for about 6 months before you can get those VA benefits. And essentially, I mean, you don't need a down payment for that VA loan, and there's no mortgage insurance. There is a
wait, run that back. Let's just so the people can clearly hear that. So you can buy a house with no money out of pocket. Correct. With the VA loan.
Yeah.
Okay.
Yeah, and there's no mortgage insurance. I know a lot of people are scared of mortgage insurance.
And that means that their monthly is going to go down also too. Yeah. Versus, you know, other people who are buying a house at the same price range, because you got to factor your mortgage insurance into your monthly rate. Yeah. But with no mortgage insurance,
cheaper monthly.
Okay.
Yeah, it's so interesting to me that I've ran into a couple scenarios where people would rather do a conventional loan over their VA, and I had to break the numbers down. I'm like, it really just makes no sense.
Yeah.
To do that, you know, like with a conventional, you can be anywhere between 3% down, 5% down if you know it's your first time buying, and then you'll have mortgage insurance for the VA. Like it's literally there's no money down. Yeah. And it's your first time use. Why not just use it? You're gonna save the most money that way.
Yeah, I agree. That's super smart. So I know with like we were talking about Spark and VHDA and other grants and such. Can VA home loans, can they get grants too?
Yeah, so even though they aren't responsible for a down payment, they still do have to pay their closing costs. Yeah. Right. So for as long as you meet the criteria, for as a first-time home buyer within the income limits, for a VA buyer, you can get a 2% grant, and that's just free money.
2% of the sales price.
2% of the sales price, right? And
so let's say it's $300,000, you can get I'm kind of bad at math. $6,000. What is that? 6,
yeah. What's the math on that? What's anybody got the math?
$300,000. 2%, $300,000. 300,000.
So yeah, I don't know.
Times
multiply 0.02.
Or you can tell.
We're gonna keep this in also too.
Yeah.
Equal it out. Equal $6,000.
Okay.
So they can get $6,000 just given to them.
$3, man. $3.
Wow.
Yeah.
Okay.
Because you got people that shop around lenders, and as you should, you should go with whom you feel comfortable with.
Yeah.
That's the best advice I can give you.
Yeah.
And I'll talk. They'll get a second opinion with me, and they qualify for that grant.
Yeah.
And I just say, hey, you got this 2% grant you can use either towards buying down your interest rate or your closing costs.
Yeah.
Or did you want to use this, or did you just want to go with a regular VA loan? Because honestly, that rate isn't too different from what you would get on a VA loan. Yeah. You're gonna save more money getting that grant,
Yeah, and just more options there. That's really good.
Yeah.
Okay, that's really good. So a common thing that I get among military people is they think they have to use Veterans United. Like they think Veterans United is associated with the VA.
Yeah.
Is that true? Do they have to use Veterans United to use a VA loan, or can they use like services like yourself or other local lenders?
They can use any local lenders. Honestly, like the percent of VA loans that we do at OVM, I think it's roughly about 75%, 70%.
Sheesh.
So it's mostly what we do at OVM.
Yeah. And y'all do what? Thousands? Y'all do millions a month in volume and loans. So 75% of those are VA loans. So that's a high volume with that.
Very, very high volume.
So y'all are used to working these loans all the time?
All the time. Yeah, we working pretty well.
That's good. And like you said, you've got different options such that you can offer like the grants and things like that. Like that's not, the most common thing. I know a lot of military personnel that I speak to, they're not even aware of stuff like that. So, that I think that's the importance of being hooked up with a great local lender just to give you your options and such. And these are all things that you'd be able to talk about with the client on like your initial pre-qualification call.
Yeah, of course.
Right.
But before we do get into that, I do want to put a interesting piece of information out there, right? So there's actually no minimum credit score for a VA loan. Do you know that?
So I can have 400 credit score?
You can have a 400 credit score, yeah.
One of the agents, they had a client who had like a 400 credit score and like $20 in the bank, and they bought a house.
Yeah,
It's wild.
And it's really the overlays that's set by the company that determine where it's gonna be. I can't do that 400 credit score.
Yeah.
But I do know somebody.
But you can connect with someone who can.
I have a loan partner that can get the job done.
Yeah. That's what it's about. Just options.
It is. Yeah, for sure. I mean, it's gonna be a loan. You know, but you're gonna get what you can get at a 400 credit score. But we can get it done.
Yeah.
Not me personally, but my partner.
Makes sense. So Joe, we talked about the benefits of owning real estate, and that's of course having a mortgage. So why do you think long term it makes more sense to own versus rent?
Just to think about my parents, right? They bought a house 30 some years ago for about $60,000.
Yeah.
Right. And if they were to sell it today, it's probably going to sell for like $275. That's a whole lot of money.
Yeah.
They can keep in their pocket, and they wouldn't be able to make that. By renting. If they rented for the whole time there, we wouldn't have that type of retirement account, as I would look at it.
Yeah.
Just hanging out there, because you're going to pay to live anyways. Why not pay into something that you own?
That's good. And yeah, man, I think, owning real estate just gives you so much flexibility. There's a stat I always say that over 90% of millionaires, they own or they gain their wealth through owning real estate. And even if you don't want to be a real estate investor necessarily, okay, now you have options. Like I know people who purchase houses and they sold them and they put all their profits in Bitcoin. And now they're doing that. Or people who invest in the S&P and they got profits from doing real estate, even if they're not flipping houses or anything. People will buy a house and then sell it within 2 years. And I've had clients who made 100,000 plus, just from buying a house and selling it within 2 years.
Oh, wow. That's crazy.
Yeah.
That's great though.
Yeah, it's amazing because it's just building equity.
Yeah.
You just got to buy smart. And I think that's why having a great real estate agent also will help you with that. having a great lender too.
Yeah.
To making sure you buy smart.
You got to make sure you're with the right people, and that, if you have any inkling you feel like your agent just was trying to get a deal, you should just go with somebody who you trust.
So Joey, we talked about a lot of benefits of owning a home. But now let's say someone's interested. The next step, of course, is getting connected with you to get pre-qualified.
Yeah.
So I know at least what I do is I make it really easy for the client. I just say, hey, got a top local lender. He'll give you a call at such and such time.
Yeah.
Just connect you on the phone. But on that initial call, you're going to be doing the pre-qualification process. So tell us a little bit about that, what that entails. Does the client need to meet you in the office and bring, a note, pen, and, a pad? Or is that, how easy is that?
Yeah, I would say the pre-qualification process is very easy. You know, we just need to have a conversation on the phone.
Yeah.
Some people would rather have it in person. That's totally fine. I understand. Whatever makes you feel comfortable. But it's just getting some personal information about, like, you know, name, date of birth, and social, where you've lived the past 2 years and where you've worked the past 2 years. And we just plug everything in, do a soft pull, and then I call you right back and we talk numbers and see what you can qualify for, what makes the most sense for you monthly payment wise. And, you know, how much you actually want to buy, and see what's going to make sense for you. You know, at the end of the day, I think people just need to do what makes sense for them. And then even at the end of the call, it might not make sense to them to buy, and that's perfectly fine. But at least they
want to give them options.
They would just know. Like, but a lot of people are just scared to even talk to the money guy, just because, you know, they may see, oh, I got to pay this off or pay that off. But I think it's good to know what you need to work on if you do want to buy a house. You know, that's something that you do want to do. Is the money people can give you a plan to get you to where you need to be.
I agree. I think that's super smart. You know, I know there's a lot of people that want to wait until they have a particular house picked out and they're about to write an offer. They're like, okay, now I'm gonna speak to a lender. I don't think that's wise, to be honest with you. I think you want to do it, you know, way earlier than what you even think you're ready, to be honest with you. You know, I had one example of a client that I was working with who knew they need some credit work and such. They had some credit card debt, and they didn't want to speak to a lender first. They were like, okay, I know what I'm doing. You know, I can do that. So I think they had like $20,000 in credit card debt. They ended up paying it all off, and they had no money to pay for their closing costs. Versus if they would have just spoken with the lender, you know, after actually seeing their situation, literally they could have made a payment, just a few little payments, like probably like $500. And they would have been approved for their loan, and they would have still, you know, had money for their closing costs. So now that client was put in a tough position where they didn't have to be, and all they had to do was have a simple and free conversation with the lender, so they can actually have a game plan. So I think that's one of the biggest benefits of getting pre-qualified early, because you have a set game plan that's given to you. Right? Now, what about the people, you know, who know they need some credit work? Are you still talking to them, or does it have to be people with 800 credit scores? You know, are those the only people that you're going to talk to?
No, I'll talk to anybody as long as they're motivated to buy a house. I think that's the most important thing for me, is like, hey, you should open up a credit card, and this is why. You know, you need to show a history that you know how to make payments on time every single month. And they're scared, like, oh, well, I'm going to run the credit card up. And I'm just like, well, you know, you have full control of what you're spending on there. So I actually tell a lot of people, like, you know, it's good to get a certain credit card. I pay mine off every week. I don't pay any interest on it at all. And the great thing about it is you get money back for spending. So what I like to do is I use my credit card for literally everything. I get those points, and then I use that money at the end of the year for Christmas gifts. So I never actually pay for Christmas gifts in my mind. Because I'm getting that money back for actually paying for it.
Love the points, man. I went to Italy. I paid for 2 flight tickets from Italy. I paid for a flight to Turks and other things just off of points. I didn't have to touch any of my money, just using credit card points. So I think it's super beneficial. You got to make your credit work for you, is what I say. You know, a lot of people have bad experiences, you know, with credit, but that's just because they weren't disciplined. Like, they see, okay, I've got a $20,000 limit. That means I can go to Louis Vuitton and buy the whole store. No, that's not what it means. Like, it's still money that has to be paid back at the end of the day. So you just got to be disciplined with it. Just because you have $20,000 at your disposal, use it like you would a debit card. I think that'll save people a lot of stress, you know, when it comes to credit and such.
It's super important just to keep that good credit score, because you never know whenever you do have to finance something.
But that's okay. I want to speak to that too. Because what is a quote unquote good credit score? Because I run into so many people who, let's say they have a 720. They're like, okay, I don't want to even look at buying a house, so I have an 800. So what is a good credit score to a lender? Like, what can get you in the game when it comes to buying a house?
Honestly, there's different credit tiers. I'd say like an average one is 640. 620 is like slightly below average, right? But even so, whenever we see that, we can honestly give them some pointers to bump it up to like the next credit tier, and then have them have a better credit score for their interest rate. You know, if it's able to. I always check it myself. I'm like, hey, you know, I just want to give you that option. I would feel bad if I didn't. You know, I had one person that had a 640, and if he just paid some certain things off, he would be bumped up to like a 720. So I was like, hey, just so you know, I mean, he's got to pay it anyways, right? So why not pay it and then save money on your interest rate?
And that's what you do, right? You give them a game plan free of charge, of course. And you basically do all the work, and you say, hey, like, all you have to do is this, and that, and you can get your credit score to that. That's wherever they want it to be.
That's it too. Yeah. Another misconception is people think that they need a lot of money to buy a house. Like, you know, you really don't. There's a lot of programs out there to help finance the down payment for you. So as long as you got to have some, but like, you know, you don't need 20% down or whatever the misconception is.
Exactly. Just like that story I referenced with one of the agents, you know, 400 something credit score, $20 in the bank. They bought a house.
They bought a house.
Like, we can make it work for you. It's just everything's situational. But we won't know if we can help your situation until you talk to us first or until they speak to you first. So that's why I encourage everybody, like, just get connected, like, just so you can know your options. That's super important, you know. Don't overthink it. That's what we're here for. That's what our job is, to do all the hard work for you. Basically, you sit back and, you know, when it comes to us needing stuff, just make sure you send that stuff in on time, of course, and, you know, we'll put you in the best situation possible. So, Joey, this has been a great convo. You know, I think that this will be valuable for the people. They'll be able to get some great information from this. And for anybody that's watching this, if you guys are interested in purchasing a house or you're learning more information about it, you can reach out to us. You can send us a message here, or you can go to www.theassetsteam.com. Appreciate y'all for watching, and tune into the next video if you want to learn more about real estate.